What's going on, guys? I've got a quick video here about the Fed rate hike. We just got the announcement. I'm gonna look over that. I'm gonna briefly look over the overall market, see what the effect was here. And then we're gonna look over a couple of statements during the Fed speech and why the market's reacting so negatively. Now, there was a chance that it was gonna be a 75 basis point hike. It ended up being a 50. Of course, there's a chance it could have been a 25 basis point, but I don't think anyone was really expecting that. And while coming into this Fed meeting, some people were thinking the CPI coming in under what was expected might be a really good thing for the Fed. They might be a little more, dovish, a little less aggressive, you could say. And that's not necessarily the case because of the statements they made, in my opinion. But let's look over that. It's going to be a pretty quick video because I've got to leave the house soon. And I did want to get a Clean Spark video out there for you guys about earnings coming up here after hours. It's about to come up. So let's get right into this. Don't forget to like, subscribe, hit the notification bell, and let's check this out. And now, what do we see? Well, I'm over here at TradingView's heat map, and it's a sea of red. This was definitely not the case before the Fed meeting. Stocks seemed to be doing a little bit better beforehand, and just the statements that the Fed made definitely puts a little bit of fear in the market in my eyes. And yeah, the reaction is not good. Now, I wanted to bring this article here. I'll leave it down below for you guys, but I wanted to go over a few key points here. And this here reads, rate cuts unlikely until the Fed is confident about inflation. The Fed's rate projections show no rate cuts in 2023, no pivoting, which stands in contrast to some market expectations prior to today's release. And as said by Jerome Powell, historical experience cautions strongly against prematurely loosening policy. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2%. We have a ways to go. And here's another update a few minutes before that one. Fed policy not sufficiently restrictive yet. More hikes are appropriate. And he says, I would say it's our judgment today that we're not in a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes will be appropriate. And then he says to point you to the SEP, which is the Summary of Economic Projections. And this represents the projections of the FOMC participants for 4 key economic indicators and the federal funds rate. And Powell said 17 of the 19 people that filled out this SEP write down a peak rate expected of 5% or more. And then looking at services inflation, there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it. So we may have to raise rates higher to get to where we want to go, and that's really why we're writing down those high rates and why we're expecting that they will have to remain high for a time. And the forecast for the rate hikes was going to be 4.6%. Now we see hikes going as high as 5.1% in 2023. So you can see why the market definitely reacted negatively. We didn't see some positive words from Jerome Powell with the better than expected CPI. No, in fact, we saw that inflation is still high. Inflation is still a problem. The Fed's target is still a far way away. And while things are getting better, we're nowhere near there yet. And even here, the Fed sees inflation risks weighed to the upside. The risk is higher of inflation than lower. And finally, Jerome Powell wants substantially more evidence that inflation is in fact cooling. And he said today that the recent positive signs for inflation aren't even enough for the central bank to ease back on interest rate increases. Likely meaning we might see another 50 basis point raise next month. But let me know how you feel about the rates right now. Do you think the Fed rates are going to be continuing to increase? But one thing I've said before, and I'll say it again, is you have to look at inflation as it was. Are we going to have more inflation than we saw last year? Because those numbers that we're comparing against are some very high inflation numbers. And I think as time goes on, we will experience a little bit of an easy comparison compared to year over year, quarter to quarter, and even month to month. But that's just a basic quick update on the Fed rate. We did get a 0.5% rate increase, and just by the words of the Fed, it seems like we are going to be getting more increases than expected. I personally am of the belief that I'd rather we get on with it and move forwards and hurry up and do this than to keep dragging it on. I think a soft landing is pretty much impossible, and I will bring up one thing really quick that I wanted to show you guys here. So I did want to quickly pull up this for you guys. You'll see that the last time the rates were around 5% was during the recession in 2006 to 2008. And right in 2008, it started substantially dropping, and that's when the market started recovering. And what did we see pre-2020? Well, we were seeing a rate coming up towards 3%, and then it quickly dropped like a rock, and I think you guys know why. Now, I would personally argue that the majority of the rate hikes is over. I mean, just looking at it, we are on our way towards 5, and we are on our way to finally breaking the back of inflation, breaking the back of the housing market, and breaking the back of employment. And all 3 of those things need to finally be broken for us to move forwards and for this market to turn around. It's just kind of interesting to see this chart though and see the correlation. If you look at GDP numbers, we are officially in a recession. And if you look at how rates are going, To me, it signifies that there's still a lot of bad left, but at least in terms of the stock market, maybe not housing, but the stock market, I personally think that the worst is over. But that's it for you guys, just a quick video. Hopefully I have enough time to upload this, get it out, and still do my CleanSpark video. Make sure you stick around for that for earnings. It is coming out very soon. But thanks so much guys, and take it easy.